Welcome to the first video on this channel. Today I'm going to be introducing myself and going over what the future will look like for this channel. It'll be pretty simple. So my name is Joe. I've been trading for 8.5 years. I am a part-time trader. I no longer am a full-time trader, as I do have a full-time job. This channel will just be primarily doing weekly analysis for the Nasdaq. So every week I'll be posting a video for the Nasdaq as to what I believe will happen for the upcoming week. So that's what you'll expect, and that's what I'll be uploading for now. Now that may change in the future. I may upload trade executions in the future and things of that nature, but for now I'm keeping it simple and doing one video per week of me predicting and forecasting price movement in the Nasdaq. So that's what will be expected going forward. So without further ado, let's begin. Alright, this is the daily chart for the Nasdaq. And right now we're in actually a premium market. And what that means is we could retrace a little bit. This is the current dealing range that we're working within. What I want to see, however, is I'm not trying to call a top in a market that is obviously going higher. I do believe we will be at 24,000 perhaps this year. That may transpire in the later months of the summer, and it may happen going into the fall. I have to see what price does as time progresses. But I am bullish still. I am not calling any sort of top, and this is our dealing range that we're working within. How these levels are derived are through some calculations, and they are known as power of three levels. And this was taught to me by an individual named Hypothetical, or Hopi, H-O-P-I for short. If you want to learn more about those levels and how they're derived, you can go ahead and purchase his book. I'm not affiliated with him. He is on Twitter. Just look up Hypothetical on Twitter. That's H-O-P-I-P-L-A-K-A. And you'll find his page, and he has his book there. Again, I'm not affiliated with him. I'm just giving credit to where credit is due in that regard. Again, this is our dealing range that we're working within. We're in a premium. We could see a retracement. However, I'd prefer to see it remain bullish and keep on moving higher to 23,238 would be my next objective. Moving into the hourly chart, we have a more refined view, more of an x-ray view of price. We can see a little bit more detail. These are those orange lines from the daily chart. Again, we're in the middle of the range in a premium. So again, we could see a retracement. Ideally, it stays above the orange line. Ideally, it comes into here and then repels away to go higher, or it rallies from where it's currently at. Again, the premise overall is bullish, and I'd like to see 23,328 targeted. That would be my objective going forward. Again, these are power of three levels, and again, they're taught by a individual named Hypothetical. No affiliation with him. However, I need to give credit to where credit is due. I use them in a different way than he employs them. He employs something called gold block levels, which I don't use and I don't particularly agree with. I use his levels in a different way, as I've discovered quite a few things about them, alongside time. Now, I don't have any of the time parameters on the chart. We're simply just focusing on the overall direction as to where price can go. So the time aspects I will incorporate later in the year and going into next year, and perhaps sharing those as well, because that is quite frankly the most important aspect of the equation of price and time. Time itself is the most important. So again, we stay above the orange line. Ideally, we come in here, or not at all. Maybe we just sweep the low here at 22,842 and repel higher. Alrighty, moving into a 15-minute chart, we have an even more refined view, more candles, and we can see a whole lot more than we were able to see in an hourly chart. So now we have those purple lines you saw on the hourly chart, and we've reduced that down even further to an even smaller dealing range here. So there's a theme here. We keep, as we lower the time frame, we keep decreasing the dealing range that we're working within. And we eventually get into very small dealing ranges as you go into the sub 1 minute charts. You don't ever need to do that, but you can get pretty crazy with these power 3 levels if you so desire, and have a plethora and many setups a day if you wanted to do that. But you only need one a week to make a career and a living out of this. Now, again, the underlying premise here is bullish. We could see a retracement, moving price lower and then ultimately moving higher. Ideally, again, I'd like to see higher prices. And as we go into next week, seeing as there's CPI next week, I believe that will be the catalyst to move higher. Now, how it does its movement to move higher is yet to be seen, but I would suspect that we would be above the highs on the daily chart, not the all-time highs, but close to them, and moving into that 23,328 level, as I had discussed prior. So again, the whole point of moving down into the lower time frames is to see more of an X-ray view and a more precise view of price action. Now, with that precise view of price action, you're able to get in sync with the higher time frame daily chart bias, for example. And again, that's expecting higher prices. So when you see these moves on the lower time frame, and as it's driving lower on that lower time frame, for example, a 15-minute chart, 5-minute chart, 1-minute chart, whatever lower time frame you're looking at, you can then understand and know that that move down is just simply a move to go higher. So again, this is our dealing range on the lower time frame. This is what we're working within, and we are expecting higher prices going into next week. Again, we might see lower prices initially, but overall we're bullish. And that will conclude my weekly analysis video for the week starting on July 13th. And until next time, God bless.